And the other problem is fundamentals sort of have how should I best put this, almost pathological relationship with risk management, in that if you have a fundamental opinion and the facts and the fundamentals don't change, the more wrong you are, the more the fundamentals dictate that you should increase your position, which is the exact antithesis of what you should do from risk management. Whereas, because to explain that a little more, let's say if I decide that wheat is a good buy at $5, if it goes down to $4, then it's a better buy, So if nothing has changed, right? So I should buy more. So the trouble with fundamental analysis, it has no risk management inherent in it, and on the contrary, it has the opposite of risk management. It would cause you to increase your position when you're losing. But technical analysis, by its very nature, if the market goes against you, unless you're one of those rare technical people who are using a counter trend approach, but with that exception, for the most part, virtually any methodology using technical analysis, if the market's going to go against you, the methodology itself would dictate you're getting out. So that was a big advantage as far as trading goes. And when I became familiar with technical analysis, I basically abandoned fundamental analysis as a way of trying to trade. And any trading I subsequently did was always technical oriented, whether it was discretionary chart reading or whether it was systematic, but it was always technical rather than fundamental.
Sure, okay. Thanks for expanding on that, Jack. Now, you've written over 10 books in the time frame of about 30 years. So it's clear you have an undeniable passion and a fascination for markets. But what was it that sparked this? And more so, what is it that continues to intrigue you about markets?
You mean an interest in markets, basically?
Essentially, yeah.
Well, when I got out of graduate school, I was basically looking for an analytical job that was not repetitive. And I guess you really can't get into anything more non-repetitive than markets because it's always changing. And so it was an interesting way to combine analysis and a subject of study that was always challenging and always changing. So I think that's what's interesting about it. It's also a place where your opinions are, you get your grades pretty instantaneously. I should be clear, though, and I know your podcast is really a trading podcast. I got to be honest, even though I am probably considered one of the experts, certainly in terms of picking the minds of traders and trading advice